Today, we're going to talk about Bitcoin and we're going to be discussing the risk metric. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Now, in this video, we are going to be going through the risk metric for Bitcoin. And this risk metric that you see here was published back in 2019. And we talk about this very risk metric. And the idea is, at least theoretically, of course, is that it should stand the test of time, meaning Bitcoin, more or less, should stay within the bounds of the risk metric, which varies between 0 and 1. So 0 is historically low risk, and 1 is historically high risk. And the problem, of course, at all times is in any type of bubble or any type of bear market, we don't know exactly how high or how low the price can go. I mean, we have all sorts of people that try to predict exactly where it might bottom out or where it might top out, and I throw my hand into the ring sometimes as well in that. But at the end of the day, no one fully knows, right? No one fully knows. And so the argument that the realization that I came to many, many years ago was that rather than concern ourselves too much with the news cycle and all the fluff, right, all that stuff, why not just have something that I can go and I can turn to and say, all right, what is the risk? I don't care, what regulatory stuff might be coming our way. I don't care, what so-and-so is saying about the price. I just want to know what the risk is, right? And that's how I navigate Bitcoin. I mean, we talk a lot about larger market trends. I've said for a long time, probably for at least the last 2.5 years, that a Bitcoin heavy portfolio will likely outperform an altcoin heavy portfolio until we get back to looser monetary policy. That's why, of course, we follow the Bitcoin dominance, which has been doing pretty well for the last couple of years. But at the end of the day, when it comes to Bitcoin, when it comes to entering into the market, when it comes to leaving the market, there has to be some level of understanding that you will not time the top and you will not time the bottom. Okay? Now, some people will say you never sell, right? And look, over a long enough period of time, that strategy has worked out pretty well, right? But if you want to try to take advantage of some of the boom and bust cycles within crypto, I think having something like a risk metric can be quite useful. But as I've said previously, if it represents a significant amount of what you would be putting into the market otherwise, you're probably better off not having it and following something different, right? So I follow this risk metric, but I think that it wouldn't be that challenging to come up with other risk metrics that you could theoretically use, right? And we'll go through a little bit of that in the video later on, but I just want you to know that you don't have to follow this one. There are others available. This is just the one that has served me well, okay? So the way it works is when you go into sort of the blue region, it's relatively low risk. When you go into the red region, it's historically high risk. And so for me, what I do, just for full disclosure and transparency, which I think we all have some level of a bias at some point, I DCA Bitcoin when the risk is below 0.4, okay? Between 0.4 and 0.6, I don't really do anything. I just, make some videos, talk about where Bitcoin price might be going, but I don't really do anything. I'm not really buying it above 0.4 risk, but I'm not selling it below 0.6 risk, generally speaking. Above 0.6 risk, I think it comes into the question, right? And there's various strategies that you can explore that I think could suit various types of people with different types of risk tolerance. The one thing that I often find the most discouraging in the crypto space is how every once in a while you'll see someone say that they've sold their Bitcoin or they're buying Bitcoin or whatever, and then the price, let's say they sell their Bitcoin, the price continues to go up, or let's say they buy Bitcoin, they publicize that, and then the price continues to go down. And then a lot of people will then dunk on that person and say, haha, look at you, you bought, the price went down, or you sold and the price went up. The problem is that we must remind ourselves that everyone has a different risk tolerance. Maybe your risk tolerance is different than someone else's. And I think that is something that you really should think about, right? Maybe you would like to DCA Bitcoin up to the 0.8 risk level because you don't really care. You just want to do what you do, right? DCA on a weekly basis no matter what, unless we're like in absolute mania mode. And that's what your strategy is. But imagine someone who's, say, nearing retirement, and let's say they have a decent amount of Bitcoin, and they want to make sure that they don't get left holding the bag for a few years just when they need the money the most. You can't necessarily blame them for taking some profits, right? So I think it's important to remember that. So when you do see people that say that sort of stuff, like, hey, if they're selling something or if they're buying something and the price continues to go against kind of what they said, you should remember that their risk tolerance could be different than yours. The other idea, of course, is that no one knows where the top is, no one knows where the bottom is. And some of the times we go all the way up to the highest risk bands, the 0.9 to 1 risk band, and other times we don't. Other times we go up, like 2019, we went up to the 0.6 to 0.7 risk band, which is exactly where we are right now. So we must remember that there just simply is no way to know how high the rally will go before it cools off. Okay? In 2019, when we went to the 0.6 to 0.7 risk band, there was justification for selling some, right? Because we were at a relatively high risk level for someone that wants to take profits above 0.6 risk. The problem is that if you're living in 2019 and you're looking at the chart and all you see is this, are you going to want to sell all your Bitcoin there? Probably not, right? I mean, you're looking at it and you're thinking, well, hell, I mean, if you sell your Bitcoin here at 0.6, 0.65 risk, what happens if it goes up to 0.8 risk or 0.9 risk? Like, what happens? Are you just going to, sell it all and watch the market go parabolic and leave you behind? That's not the idea, right? So the strategy that I like to enjoy is dynamic DCA, both into the market and out of the market. So what that would call for, for example, would be, in the 0.6 to 0.7 risk band, it would mean selling a small amount of Bitcoin, a fraction of it, just to say, you know what, we made it this far. I just want to take some profits off the table in case this is as far as we go. But you also, theoretically, like to leave room for the theoretical upside, right? So that if Bitcoin continues to climb into the 0.7 to 0.8 risk band, you're not sitting there wishing that you had not sold all your Bitcoin in the 0.6 to 0.7 risk band. So the idea is it's basically just, humble yourself and say, we don't know where the top is. We know the risk is 0.6, 0.7. It's relatively heated. History shows it could get even more heated. And so the strategy that I have used for several years is as we climb the risk bands to take some profits, right? But to still leave some in case we continue going higher. In 2019, for instance, right? If you had watched Bitcoin climb up, this was a 4x rally. And believe it or not, there are some people that like taking profits after a 4x rally. I know other people might scoff at the idea of a 4x rally, but some people like the idea if you buy and then the price goes up 4x in about 7 months, can you blame someone for wanting to take some profits? And the thing is, if you were living in the cryptoverse back over here, you would have every reason in the world to say that anyone selling here at 13K, 14K was insane, because we were only at 0.6 risk. But then we ended up going all the way back down. Now, you might say, well, there's a pandemic. Yeah, but we also went back down to the 0.3 to 0.4 risk band before the pandemic even arrived, right? I mean, this was back in late 2019, September 2019. It had already started trending back to the downside. So that is sort of the recognition that we cannot know where the high is for any given phase of the cycle. And remember, one of the reasons we talk so much about Bitcoin dominance is because of my experience in 2019 when I saw what happened as we got to the near end of the business cycle, like where we got pretty close to rate cuts, and we saw what Bitcoin did, right? It broke altcoins off of their Bitcoin support levels, right? And after Bitcoin did that, then it cooled off for a while. But it wasn't until those altcoins broke down on their Bitcoin pairs. And that's why I spend who knows how long making these Bitcoin dominance videos, because that was my experience back in 2019, was to say, look, once the altcoins break off their Bitcoin support levels, that implies some level of lower liquidity, okay? Until then, a lot of altcoin liquidity pours into Bitcoin. Then at some point, those altcoins no longer have sufficient liquidity. I mean, at this point, they still haven't collectively broken down. But if they do, that could, of course, be a warning sign. So in that case, right, like in 2019, imagine you sell a small fraction, let's say, I don't know, 1/10 or something. And then imagine you sell 1/10 and then the price goes down. You feel pretty good about yourself, right? You're like, hey, I took some profits. And then it pumps right back up. Now, if you had sold everything, imagine if you had sold everything and then you watched Bitcoin's price pump from, 9K back up to 12K, you might be tempted to buy it all back at a loss, right? Like let's say you sold it at 11K or something, you watched it go down, you saw it pump back up because maybe you sold everything, you could be tempted to buy it all back at a loss, only for the market to then just chop you up and spit you out. By doing it dynamically and only doing small amounts at the lower risk levels and large amounts at the higher risk levels, you maintain that flexibility. So like if you sell 1/10, there's part of you that wants the market to go down so that you can buy back lower. There's also a part of you that doesn't really mind if the market keeps on going up because, hey, you took something off the table. You got something to show for it if the market tops out. But you're fine if the market goes higher because you still have a decent stack of Bitcoin. Now, I know the whole diamond hand stuff comes into play and that stuff, but you have to remember, you know, we just cycle back and forth, right, between fear and greed, and we go, through periods where the whole diamond hand stuff, everyone believes it, and then a year later, everyone's mocking it. So it just goes back and forth. I would try not to get lost too much into that. If you're the type of person that doesn't really have any interest in ever taking profit, and you just want to diamond hands it forever, history shows that eventually it works out. So who am I to say anything about that strategy, right? Who am I to say anything? Historically, it has worked out pretty well. Now, imagine you saw what happened in 2019, where it topped out at 0.65 risk, and then said, all right, well, now this time I'm going to sell everything between 0.6 to 0.7 risk. And so then when it got to 0.6 risk back in December of 2020, maybe you sold everything because you saw back in 2019, that's where it topped out. Well, guess what? The person who sold everything then watched Bitcoin go up another 3.5x after that point from the 0.6 to 0.7 risk band. So you can see how dangerous it is to look back at any prior peak and assume that it has to play out the same way. If going into 2019, you thought it had to play out like 2017, you would have then witnessed a 70% drop after hitting that wristband. But if in 2021 you went into it, or 2020 you went into it thinking it had to top out at 0.65 risk, kind of like it did in 2019, the market left you behind. So what I did, right? What I did going into this rally was I did sell some Bitcoin into this rally at the 0.6 to 0.7 wristband. The idea would be to sell a fraction of it. Now, admittedly, back in 2020, when I sold some Bitcoin at that risk level, a small fraction, I just sold it. I sold it to ETH because the ETH tsunami normally occurs after Bitcoin hits new highs, and Bitcoin had just hit, it had just hit new highs, so it was just a matter of time. And so, yes, while I did take a small fraction of profit away from Bitcoin, I don't remember what it was, maybe it was like 1/10 or something. I just put it into something else that was at a lower risk level. Okay. So Bitcoin continued to go higher. I continued to have the majority of my Bitcoin as it went into higher risk levels, continuing to dynamically DCA sell it as it went into higher risk levels. And then eventually we cooled back off. Okay. And then when it got back over here to the 0.4, 0.5 risk level, I started buying some again. Back then, I used to buy Bitcoin up to 0.5 risk. Okay. So I think every cycle I become a little bit more risk averse. 2 cycles ago, I was just kind of buying it, whatever. And then last cycle, it was up to 0.5 risk. This cycle, it's up to 0.4 risk. And so that's kind of how I navigate it. So looking at where we are today, right, Bitcoin's risk is at 0.62, right? And I can't tell you. I can't tell you exactly where the high is. I know that in 2019, Bitcoin rallied until ETH Bitcoin broke down, until the ETH Bitcoin valuation broke down. It rallied until the Bitcoin dominance retraced the 0.5 retracement level, which today would correspond to 56% dominance. That's what happened back then. I don't know if that's what's going to happen today, but what it shows you is that in the grand scheme of things, we are getting into some higher risk levels, right? We are getting into the higher risk bands. It doesn't mean that it can't go higher, but history also would caution against the idea of assuming that it has to go to the highest risk band, right? Like we made it to the highest risk band over here in 2021. And I remember back over there, I sold 87% of my Bitcoin back then in 2021 at these higher risk bands. And honestly, if I'm being completely honest, I felt like an idiot because, I was selling and then the price of Bitcoin just kept slowly going higher. Looking back at it now, we can tell it was just a massive distribution phase, right? Back then, it was very uncomfortable selling. I think I had sold a majority of my Bitcoin by the time it was 58K. And then after selling it at 58, I watched it go to 59 and 60 and then 61. It hit this top here at like 58, and then it had another top at 61 and then another top at 64. And I'm just like, well, hell, it's just going to keep going higher because everyone else in the cryptoverse seemed convinced it was going to 300K. And I remember people saying like, you sold all your Bitcoin at 58K and it's about to go to 300K, screw diminishing returns, right? And that was sort of the outlook back then. It was 300K or nothing. And so I felt uncomfortable doing it, but at the end of the day, I just stayed true to it. And it ended up working out, right? It ended up working out after we gave it enough time. But in the moment, it felt like the rally was never going to end, right? It felt like it was never going to end. And eventually cooler minds prevailed and Bitcoin cooled off for a while. We then, of course, got another pump, and then the bear market began. So then when we got over here, I bought Bitcoin between the 0.1 to 0.2 wristbands. We went to the 0.1 to 0.2 wristbands. My limit orders got filled. Then we went back above them, and then I reset them, and then they got filled again. Okay? That's what I did. You'll also know that I didn't buy any altcoins. I just bought Bitcoin. And some people might say that was a mistake. I gave my reasoning for it back then. My reasoning for it was because if I'm trying to maximize my risk-adjusted returns in a QT and rate hiking cycle, it would make more sense to bet on Bitcoin than it would to bet too heavily on altcoins. Now, I conceded back then that there would be many altcoins. And again, maybe more than just saying a few, but there would be a lot of altcoins that would outperform Bitcoin. But as I said back then, for where I am in my own investing journey, that was not too much of my concern. My larger concern was figuring out, how do I maximize my Sharpe ratio? How do I maximize my Sortino ratio? How do I maximize my risk-adjusted returns where it gives me exposure to the upside of crypto in case we go up for a while, but it also minimizes my downside risk. And again, I said back then, I think the Bitcoin dominance is going to start a rally from 40% to 60%. And so that was why I was sticking with Bitcoin, just going to stick with it because it seemed to me that all Bitcoin pairs would bleed. Now we look back on it, and today the Bitcoin dominance is right around 54%. Look at late 2022 and early 2023, right? When in this area, right? Look what's happened to Bitcoin dominance. It's gone from 40% to 54%. Now remember, the target that I set long ago, which may or may not be hit, was 60%. And a lot of people say that this looks like a topping pattern for dominance. They could be right. I still think it's going to break to the upside. The Fed has been pretty clear they're not going to be cutting rates anytime soon. Watch what they do, not what they say. But remember, last cycle, Bitcoin ruled the roost until the Fed went back to QE, where they started expanding their balance sheet. Okay? And again, if you're not familiar with the idea of risk-adjusted returns, one way to think about it is you can see that like for a portfolio consisting of Bitcoin and ETH, the portfolio that maximizes your Sortino ratio, which does not punish positive volatility, is 78% Bitcoin. Well, I mean, you can see it's not rounded properly right here, but around 78% Bitcoin, 22% ETH. Okay, so that is the point, right? That is the point. And if you would include, some other cryptocurrencies in here, you could see kind of how Bitcoin would still maintain the largest percentage of any of those portfolios because it sticks around from one cycle to another and tends to go put in new highs eventually. Whereas a lot of these other ones don't. It's just a fact. And I'm telling you guys, when I joined the cryptoverse many, many years ago, I refused to believe that fact. And then eventually I sort of was like, all right, this is how it works. It's okay to bet on altcoins, but just remember that they do not typically go up against Bitcoin forever, and then eventually they bleed back to Bitcoin. And that's why, just from a pure mathematical perspective, when you compare Bitcoin to these other cryptocurrencies, Bitcoin would still make up the majority of your portfolio if you're maximizing your risk adjusted, including a lot of altcoins that are really old and no one cares about anymore. Like, who cares about Litecoin, Monero, and XRP? They're relics of a prior cycle. But the problem is that a cycle or two ago, no one was saying that, right? And now all the new altcoins, right? All the new altcoins, people are saying, well, you should be looking at those. Well, you can't use something like modern portfolio theory with something that's only been around for a few months. Yes, the new shiny stuff can pump, but in general, to maximize your Sharpe ratio, your Sortino ratio over a longer period of time, it makes sense to be heavier Bitcoin rather than heavier altcoins. So then going back to this risk stuff, right? I bought some Bitcoin over here, right? I did. Could I have bought more? Absolutely. Absolutely. I did not. It's not like I went knee deep into Bitcoin. I bought some. I think I published like 7 or 8 limit orders that were filled. Could I have had more filled? Yeah. I mean, if it had gone lower, I would have had more filled. If Bitcoin had gone to 14K, more would have been filled. But it didn't, right? So the ones that got filled, and then we've gone up ever since. Now, right now we're at 0.62 risk. So the question is as well, where does it go from here? Unfortunately, I can't know. I can only say, what's happened in prior cycles, but also with a constant reminder that every cycle plays out in a somewhat different way. None of these prior cycles are really that similar to each other, right? Like last cycle was a double peak cycle where the second peak was basically at the same price as the first peak. The cycle before that was just a long, steady run up. The cycle before that was a double peak cycle where the second peak was much higher than the first peak. So all these cycles have been really very different from each other, right? And then the first cycle was just basically straight up, right? Straight up, double peak, more of a long, methodical move up, double peak where the second peak was the same as the first peak. I'm guessing that this cycle will be different in some ways than every other prior cycle. And in some ways, it already is. Because if you were to look at the risk of Bitcoin in February of having years, it's never been this high. Take a look. February of 2020, the risk was in the 0.4 to 0.5 risk band. February of 2016. Let me go to February 2016. The risk was in the 0.3 to 0.4 risk band. So 0.3 to 0.4, 0.4 to 0.5. We're not even in the 0.5 to 0.6. We're in the 0.6 to 0.7 risk band in February. And then February 2012, risk was only 0.1 to 0.2. So in some regards, we are already different than the last few cycles because of where the risk is at this point going into the halving. So you could already argue that it's playing out in a somewhat different manner. It's also playing out differently than 2019 because 2019 had a local top in the pre-halving year. Here we have continued to climb higher without really getting any type of those local tops. Now remember, in 2019, it topped 1 month before the first rate cut. And also it topped after all Bitcoin pairs broke down, which Bitcoin, my interpretation, is still in the process of trying to accomplish that, although it's taking a really long period of time. So what I do, despite the news cycle, despite my chatter about short-term bubble risk and the bull market support band and all that other stuff, right? All I do is I look at the risk and I say, hey, is it too high? If it is, I might sell some while also maintaining some position in case we continue to go up. If it's too low, then I'll buy some. I don't concern myself too much beyond that because otherwise I feel like you can go crazy thinking about, what's going to happen. It's better just to have a plan and say, you know what? I don't really care what happens. If it goes up, okay, I'll sell some. If it goes down, all right, I'll buy some. And I think navigating the cryptoverse in that way makes a lot more sense because then you have a plan no matter what happens, right? You don't have to worry so much if one thing plays out over another thing. It's just if this, it's like a computer programmer, right? If this, then that, else that, right? It's just, if risk goes to a certain level, you do this. If it does something else, you do that. So that's what I think makes the most amount of sense. If you take the color code out of it and you just look at historical risk levels where you just look at it like this, you can see the current risk is basically back to where it was, but it's or maybe a little bit higher or right around that level. 2019, it actually topped out at 0.645 risk on the daily close, but I remember on the wick, it actually went all the way up to like 0.68 risk, or it might have even been like 0.685. It was pretty close to the 0.7 risk band. But it ended up topping out right before the Fed started to cut. And so that's another reason why I talk so much about where, I know it's boring for a lot of people, but that's why I talk so much about, monetary policy is because of just experiencing what happened last time with Bitcoin. And I mean, right now, the market is expecting the first cut to come in June. But remember, this is constantly changing. I mean, next month it might flip back to May. The following month, maybe it flips to July. I don't know. But that's why we talk about it, is because at least in a prior cycle, Bitcoin reacted in a certain way when monetary policy shifted, and therefore it makes sense to at least be somewhat prepared in case that thing were to happen. Right, so like the total cryptocurrency market cap risk is 0.615, which is funny because the altcoin market cap risk is 0.615. Bitcoin risk, 0.620. As you can see, risk on ETH is actually higher than Bitcoin at 0.667. And I agree. Again, the reason why I like this stuff is because it has nothing to do with my opinion on what I think the price should be or what I think the risk should be. It just is what it is based on historical data, right? It's just looking at historical performance, accounting for diminishing returns, and saying this is what is theoretically possible based on the historical record. And then you can go down the list and kind of see like what the various risk levels are, right? Like the risk on ADA is 0.482. On Link is 0.647. On Solana is 0.739. I think everyone kind of understand like why that is, right? I mean, we saw Solana go on a massive run in 2023. It makes sense that the risk is higher. ADA hasn't performed as well. DOT hasn't performed as well. Avalanche has performed somewhat okay over the last few months, but it still has underperformed Solana over the last year, and that's why the risk is a good bit lower. Matic at 0.342 risk, the reason why it's lower is because it just hasn't done anything in a while, right? It had a great rally in late 2022 and early 2023, but it hasn't really done much since then. It's just kind of been relatively stagnant. Um, Same thing with Cosmos, with Atom. I mean, it's at 0.39 risk. And sometimes I think, like, as investors, we have this habit of selling what's moving to something that's not. But a lot of times I will say, just because something's at a high risk level doesn't mean it can't continue to go to higher risk levels, right? I've seen that happen many, many times. Sometimes someone will chase something that's at a lower risk level in anticipation of it moving. But what ends up happening is the thing that was already moving keeps moving, and the thing that was at a low risk level was at a low risk level for a reason. So you have to remember that, right? Like, it is not always worth constantly chasing the next thing in hopes that it pumps. Sometimes you just got to ride your winners and let the losers be. But that is my general thought process on all this stuff. But you can use all sorts of things, right? Like, you can look at all sorts of indicators that oscillate between a certain range and say, all right, I'm just going to stick to this, right? If it goes low against this range, I'll buy. If it goes high against this range, I'll sell. And just sticking to that no matter what. Now, if you go over to the summary risk, which includes the social risk, the on-chain risk, and the price risk, this is what it looks like. And you can see that risk is currently at 0.403. Note that in 2019, it topped out at around 0.5. In 2016, in mid-2016, it found a top around 0.4 before it cooled off significantly for quite a few months. Right now, it's currently at 0.403. It already went up to around 0.3 or so. But again, that's just where the current risk level is. So when we think about navigating the cryptoverse, I think it really can be extremely stressful if you're constantly changing your strategy based on the news cycle and on all this other stuff. But I just want to reiterate again and again and again that my strategy is to DCA Bitcoin when it's at a lower enough risk level, and to start selling some if it goes to a high enough risk level. I'm not in the diamond hands forever camp. I'm just not. Like, I'm not. I mean, for me, investing is a way to, it's a way to make money. I'm not going to diamond hand something if I think it's going to drop 70 or 80%. Again, if you don't mind that, history shows it tends to work out for you anyways. But that's just not my strategy. Like, my strategy is to say, well, if we get up into extremely high risk levels, I want to take some profits off the table. If we go to low enough risk levels, I want to buy some Bitcoin. The reason I bought Bitcoin in, a year ago or a little over a year ago was because the risk levels was relatively low. And again, all of that was published in ITC Premium. If we get to a point where Bitcoin dominance breaks up closer to 60% and alt Bitcoin pairs break down, then I think altcoins might become more on my radar. But I will remind people that 2024 Ben is different than 2020 Ben. And back in 2020, I would have already been knee deep in the altcoin market. And, I didn't know that a massive crash was about to happen. And I'm not saying it has to play out like that, but I didn't know that was going to happen. And I got my portfolio completely rinsed. And it was awful. This cycle, I'm just being a little bit more risk averse by sticking more with Bitcoin over the altcoins. But if Bitcoin dominance were to go up higher, and then I felt like altcoins were done bleeding against Bitcoin collectively, then I might get interested in the altcoin market. That doesn't mean you can't make money in the altcoin market. I've said that many times. Like, if you want to take on more risk, the risk levels are there, right? For the altcoins, they're there. It's just my strategy has been a Bitcoin heavy strategy for several years now, just in anticipation of this exact Bitcoin dominance rally. The most brutal thing about crypto is if you're like knee deep in the altcoin market and then you click, if you have your portfolio tracker up, everyone looks at the USD valuation of their portfolio. If you're knee deep in altcoins and your portfolio just keeps bleeding against Bitcoin, that's a problem, right? You're taking on more risk and you're getting less reward. Now, if you go over to your altcoin portfolio and you see it increasing in its Satoshi value, then you're doing something right. I'm not anti-alts. I just think when the dominance rally is happening, why not just why not just stick with the king? When the dominance rally is over, then altcoins for me become more interesting. I'm not trying to take away from what anyone else wants to do. That was just my strategy. I will say in the future, in future cycles, I might not talk as much about the dominant stuff because it seems like it has led to a lot of resentment. Even though many altcoins have bled against Bitcoin and the Bitcoin dominance, I mean, hell, like I can't even imagine. I mean, look at like monthly Heikinashi candles for dominance. I mean, it's basically just been up only since December 2022. So this is one of those things where it's like, yeah, technically I was right about it, but a lot of altcoins went up too. And I found that a lot of people, despite my best efforts, right? Despite my best efforts, a lot of people only care about USD valuations. They do not care about Satoshi valuations. And so I'm going to stick it through for this cycle for sure. I mean, I'm gonna as long as Bitcoin's dominance is going up, I'm not going to to change my strategy. But I think in future cycles, I might focus on other things because that seems to be what other people would prefer, right? To focus on USD valuations as opposed to Satoshi valuations. So this cycle, I'm going to keep on doing what I've done and what I've suggested. I'm going to keep watching dominance, see if it can break to the 0.5 retracement, which is at 56%, and then theoretically go all the way up to 60%. But I just want to, let people know that in the future, it might not be as much of a topic for me. And I also know that the higher the dominance goes and the closer we get to that 60% target, the people that listen to me, the further you wait into the dominance rally to convert your alts to Bitcoin, the riskier it is because you end up being the person that might do it at the top of Bitcoin dominance, right? So I still think dominance can go higher, but I just don't want people to sort of fall into that trap. I mean, the time to convert alts to Bitcoin would have been, 2 years ago, not now. I mean, it doesn't mean that Bitcoin dominance won't go up more. I think it will. It's just that, that strategy was laid out 2 years ago, and right now I think it's pretty late to sort of just now hop on board that trend. But I still do think there's a case to be made that it'll go up, to around 60% or so, and hopefully it can do so in the not so distant future. So I think I can live with myself for keeping a Bitcoin heavy portfolio for the last couple of years, considering this Bitcoin dominance rally has occurred. I understand there's been a lot of resentment though because of it, and I really don't like being the bad guy. So I just want to be clear about my future intentions on the channel. And also we'll just keep following. I'll keep, of course, following Bitcoin, and the current risk level right now is 0.62 risk. Just for reference, remember the risk levels are dynamic. They change. They're not going to stay put. But just for reference, at 60K, that corresponds to 0.681 risk. At 56K, that's 0.65 risk. 0.4 risk is all the way down at 29K. So if we get some type of crash like that, that would just be the level that would correspond to 0.4 risk. It would be about a $29,000 Bitcoin. 0.3 risk is $21,000 Bitcoin. And then just go to look at the other spectrum. 0.8 risk is $78,000 Bitcoin. And 0.7 risk is $63,000 Bitcoin, right? So keep in mind that anything on this table here can happen, right? All the way from 0 risk all the way up to 1. Anything in that table can happen because that's what has historically marked the range of Bitcoin, accounting for diminishing returns, right? So if it's on the table, it would imply that it is theoretically possible. And what your job should be to manage your risk. The higher we go, for me, the less exposure I have. The lower the risk, the more exposure that I have. And that's the way that I navigate the cryptoverse. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up.